Good afternoon, everyone. Welcome to the JD Power Insurance Intelligence web or podcast, I should say. And for today's podcast for December, what we're going to talk about is a couple of different topics. This is something we've typically done at JD Power over the last several years, is kind of what happened in 2025. What's the current state of affairs from a JD Power perspective in the insurance industry across our various products and services and touch points, be it auto insurance, home insurance, the life insurance space, shopping behaviors, and then also a little bit of a look ahead. What are some of the future trends and what's the outlook that we have heading into 2026? So a couple key topics we want to touch on today, and I'm pleased to be joined by a number of experts from the team here. We've got Steve Crewdson, who is our subject matter expert on the auto insurance and digital touch points. Craig Martin, who's our subject matter expert on the life and annuity touch points and also for home insurance. And then Tony Soloman, who leads up our list shopping tracker product, which basically tracks auto insurance shopping and switching behavior in the marketplace, which is definitely a hot topic in 2025 and going forward in the next year. So with that, what we're looking to do is kind of get the team's perspective on their particular touch points in terms of what's the current state of affairs. So with that, we'll kind of go round robin here, starting with Steve, then on to Craig and Tony. But Steve, I'm curious from your perspective, as we look at auto insurance and also kind of the digital touch point, what did you see in 2025 from a customer experience perspective?
Yeah, hi, Scott. Thanks for having me on today. I would say in the auto insurance study and the digital work that we do, we saw a few interesting themes emerge in 25 that are different than what we've seen in the past. So one thing we get a lot of questions on from our clients, from the media is, hey, with all the recent rate taking that's been going on and the premium increases for insurance, are you seeing customer satisfaction decline? And in fact, we're seeing customer satisfaction hold really steady during these last couple of years. So a bit of a surprise. Even price satisfaction specifically has remained steady. But underneath that, there's been some shifts in the foundation of the industry, of the customer base. If you think about, not all customers are created equal. Some customers are more valuable to their insurer than others. And what we're finding is that earlier in the rate-taking cycle, those really low-value customers that are really price sensitive, they don't feel a lot of connection to their insurer, and other traits that make them less valuable to their insurer, they started shopping early in the rate-taking cycle, but we weren't seeing as much shopping from the really valuable consumers. And what the 25 auto insurance study showed us was those people are finally starting to feel that they've dealt with enough from their insurer. They've seen enough rate-taking. They've had enough to frustrate them to consider getting out to market. So when we asked the different groups of customers, the high, medium, and low-value customers, how likely are you to be retained by your insurer in the future? The high value customer, that's usually the stickiest customer, the longest tenure with their insurer, they were the group that was least likely to say they're going to renew with their insurer. So that was a big shift, that your most valuable customers could be leaving you in the near term, for insurers to hear that. Second was around UBI. Usage-based insurance is increasingly important to consumers when they're out shopping. And we're seeing that in the auto insurance study, our subscribers have seen a lot of details around how to provide a better experience for a UBI participant. A couple things we saw there. Many participants, in fact, the majority of participants, don't think the information their insurer is collecting what they're driving is accurate. They also feel like they don't. The using a mobile app to collect their driving information is not really good for them. It's actually the least satisfying channel to collect their driving information. And yet it's the most common channel used by auto insurers right now. So there's that gap to close of you're really using the channel that people most find frustrating to measure their driving behavior. You're using that more than the others. So aside from that, there was a new key performance indicator in this year's study that we've never had before. And it ended up being the most important KPI in the study overall. And that was centered around providing a seamless experience across channels. So if I contact my insurer through the call center or an agent, and then I go to the website or a mobile app, how seamless is that experience across the channels is the largest driver of satisfaction. And that kind of leads into the digital conversation. What we saw was those consumers who started a multi-channel interaction with their insurer through the mobile app were the most likely to say that they had a seamless cross-channel experience. So in many ways, we saw that if you get your customers using your digital channels more, whether that be your mobile app or your website, your customers are more satisfied with you, and they're more likely to say their experiences across channels are seamless. So a good thing for insurers is to keep pounding into their insurance customer base that they need to be using the mobile app and web as much as possible, because it helps the experience overall, and it helps them, that those customers feel that their experiences across channels are seamless.
Thanks, Dave. I know that new KPI you just mentioned was a lot of the carriers really zeroed in on that and had a lot of value in that. Is that one where I guess conventionally you would think maybe a direct writer would perform better on that than maybe an agent writer, like say a State Farm or Allstate? Was that the case, or did it vary a bit?
Yeah, we went in with that hypothesis, and we found there's no real channel, like there's no magic, no silver bullet or magic button for the channel. That you have some direct carriers that do well on that, and you have some agency-based carriers that do well on that, and vice versa. You have a mix of carriers through their different distribution channels that do poorly on that KPI. So it isn't as simple as it could be. Just if you're serving direct, you'll be better on that KPI. Agents can go a long way to helping a seamless transaction, and that came into play in the KPI too. If you started your experience at an agent, it did hurt the performance in that KPI, because customers think my agent should be able to answer all my questions. But if you found that you started there and your agent said, no, call the call center or go on the website and handle that, that really hurt the seamlessness. But overall, agent-based carriers didn't suffer compared to the direct competition.
That's very interesting. And then I guess, that's kind of the the update on the auto insurance side. And maybe, Craig, that's a good transition to talk about home insurance. I know as we talk about home insurance and property insurance right now, we see that rates continue to really stay fairly high. Auto insurance rates have kind of normalized a little bit, I think it's fair to say. But what's kind of your perspective on the state of home insurance from a JD Power side of things in 2025?
Yeah, no, I mean, I think similar to what Steve mentioned, we've definitely seen premium increases continue to rise, have been steadily going up the last couple of years, and that has a material impact on satisfaction. And I think that speaks to a lot of this around communication and engagement. How do you communicate these changes? How do you explain it? And again, that rate taking, if customers don't understand it, they get really frustrated. I mean, in fact, we see it's almost 100-point difference in satisfaction among customers who say they had a premium increase and those that didn't. And so that's an awareness. Now, we know in the market it's even higher. So the reality is that people's home insurance has been going up pretty dramatically in the last few years. So, that one is like, do they know it or do they think it's coming? So that there's this opportunity where, how do you get that message out there? I mean, one of the interesting things we've seen kind of tied to the marketplace is that it's not just the insurer talking about it. There's other players in the system, so to speak. So a lot of folks who have home insurance have a mortgage. The mortgage companies are starting to talk about this. So you're increasingly seeing this kind of challenge and issue that, you got to be better at communicating. That speaks to seamlessness. You raise my premium. How does that message get to me? How do you answer questions? And, one of the interesting things we see is that the impact on scores is not just on the price part of that, but actually we see it's people, it's digital, because, what we're thinking is that they have a problem, i.e. you raise my premium. I don't understand that. Now I need answers. Where do I go? I go on your website. I can't find a good communication, good information about why my premium is up. I call somebody. They should have told me ahead of time, but they didn't. That ties into our agent study. We see a lot of the agents report that they are proactively shopping and communicating about premium increases. Now, the thing is, if you do that effectively, customers do say they have actually better relationships. The agents say they have better relationships. Price increases are going to be part of the business. I mean, that's kind of the nature of it. But being able to communicate it and engage is really that key. And I think, again, we're seeing, agents, for years and years, they've talked about, independent agents are going to go away. It's all going to be direct. That's not the reality. And I think we've seen that for years now, that the agent's still really important. What's their role? That's evolving. Kind of, again, this kind of ties to life and annuities. Being an advisor, giving guidance, I think is actually more important these days than it has been in the past, because, again, your price is central. How do I retain you? Well, I can compete on price, but only one can be the best price company. It's the relationship, the value, explaining and understanding. I mean, that's the biggest challenge is so many people don't understand why things are happening. They don't understand their policies. And maybe, really important is if you need coverage and you have a claim, am I actually going to be taken care of? And if I want to understand that and really deliver value. So we're seeing that kind of dynamic of prices going up. How do you show value? A lot of it ties back to the people and making sure they truly get a good understanding and they really can grasp, what am I getting? What is this exchange? Not just, hey, I just want to pay the least amount of money. And, again, UBI, all these other things come into play as well. Yeah. And I think being able to communicate and advise and the agent's role in that is really critical.
Yeah, I think it's a great point. I mean, we've been saying it for years, but the guidance point that you made is particularly with home, it's a more complex product. A lot of people don't understand their home policy. Rates are going up. Really critical to be guidance consultative based right now, I think, to your point, Craig.
Yeah, and I think, tying it back to like life insurance, another complex product that is usually sold through an agent. And then we're seeing that over time, satisfaction goes down. And that is in large part due to a lack of, people forget. Why did I buy that in the first place? Why am I keep paying this premium? Do I still have the right coverage, 10 years later? And so this opportunity exists where, again, there's competition for mind share. And that's not just with other insurers. It's, all sorts of service providers. So how do you engage them and deliver value and kind of play your right role? And I think we're seeing that across the board, that there's a real opportunity. Again, people are fighting for that mind share, and it's not just, again, you're the insurer down the street. It's the banks, it's the financial advisors, it's all sorts of folks trying to get that person's attention.
Yeah, thanks for that segue. I was actually going to just ask you about life insurance because, Craig also manages our life insurance studies and our annuity touch point. Anything else jumping out as far as, the year in review in terms of life insurance or annuity that's kind of unique versus personal lines that you saw?
Yeah, the one thing that we found really interesting, traditionally, we haven't seen as much of a shift to more of a direct model in life insurance. That continues to hold up where consumers don't want to buy, and for the most part, just, on their own. They want advice, they want guidance, they want help understanding. But what was interesting is those that do buy direct and kind of through a more central channel are actually much happier than those working with agents, which I think a lot of folks kind of look at us, go, wait a minute, that's where we spend all our money. That's where we get our big dollar policies. And that's true. But I think the challenge is, what are their expectations and what are their experiences? A lot of folks buying, a big dollar policy, they're kind of expecting inherently, you sold it as an agent, you're going to kind of give me service and ongoing engagement over time. And they're not delivering on that. And I think that's putting their business at risk over time. It also opens the door to, how does, technology in the future, throw out AI, artificial intelligence agents and those sort of things to give better advice, personalized messages, reconnect with customers to make sure that they, it stays top of mind. You stay kind of connected because, again, inherently people are going to forget, like they buy lots of things. It's not that they don't need the product or didn't want it, but they kind of lose sight of the value. And so how do you make sure you maintain that? I think technology is going to be a key, kind of tool for them going forward on that.
Totally agree. Yeah. Thanks, Craig, for that. Tony, I'm really curious from your perspective, the auto insurance shopping experience. We were reporting record levels of shopping, earlier this year, and we know that kind of continued throughout this year. What were you seeing from a kind of an auto insurance shopping perspective from your end this year in 25?
Yeah, thank you, Scott. So yeah, we saw that happen, come through in our list data in a big way earlier this year. We saw record shopping and switching in the product in list in the 5-year history that we've been tracking this. In the past, when we saw volatile markets, we saw shopping peak, but we didn't see switching, go that high because people went into market, they went and they got quotes, and then they realized that there wasn't really anything else out there that was better. Now that things have stabilized a bit, we saw not only the shopping increase as people started to see rate increases from their current carriers, but we also saw switching increase because people were able to find better rates. Toward the latter half of 2025, we've seen that start to taper off a little bit. We've seen it level off from the records that we saw back in Q1. And then on the home and rent side, we've seen that sort of just remain pretty consistent with prior years. Although the latter half of the year, we started to see switching tick up just a little bit on both of those product lines. And I would say the other big thing that we've been tracking and that we've been watching pretty closely is just what's happening with Progressive and State Farm. So as people have shopped and switched, we've seen Progressive get the lion's share of new customers throughout the year. And I think a big topic that people are looking at really closely is the gap between Progressive and State Farm in terms of who's going to be the number one auto insurance carrier. Starting to tighten quite a bit, more so than what we've seen in prior years. So something that we're tracking pretty closely going into next year.
Thanks, Tony. Appreciate it. And maybe a follow-up question. We'll go reverse order here. The old crystal ball question. It's always tricky to project what's going to happen next year, and it's definitely, we've anticipated maybe Progressive does pass State Farm in 26, that type of thing. Any sort of look ahead, you have from your end in terms of auto insurance shopping or otherwise, home and rent?
Yeah, I mean, it's like I said, the Progressive State Farm storyline is something we're going to track pretty closely going into next year. The other thing that we did a little bit of, we went through and did just a quick pulse check on the role of AI as it relates to shopping for auto insurance and home insurance for that matter, but just AI in general from a consumer point of view. And what we're seeing is initially probably surprised us, but the more we dug into it, it was less shocking is how much AI is playing into the process. As has been mentioned, insurance is a pretty complicated product. And what we've seen, and we've actually done some follow-up research from the initial pulse check that we did a couple months ago, just to get a better understanding of what people are actually using this for. And probably isn't that surprising that the majority of people who use AI are really using it to just get more information about insurance in general. There's a lot of complexity, and the AI is helping sort of make that a little bit clearer for people. Using ChatGPT to sort of like translate, what does all this mean? So as that becomes more prevalent, and as shopping and the ability to shop becomes much easier, I think we're still going to see those shopping rates sort of remain pretty elevated going into next year. It'll definitely be interesting to see, switching remains as high as we've seen this year too. A lot of it's going to be dependent on some of the economic factors next year, and affordability obviously is going to play a big role in 2026 and beyond.
Yeah, no question. It's definitely going to be interesting 26 from a shopping perspective. You also mentioned AI. That is clearly a hot topic for the industry. We've heard that directly from all of our carrier clients. It's definitely a space we're looking to probe further into, next year at JD Power. Craig, probably same question for you. The crystal ball question. Maybe we talked about home insurance rates and we talked about life insurance. Maybe as we look at home insurance and the life space, which kind of your thought or outlook for 26?
I think, building off the whole idea of AI is how do you get more personal and more connected? And so how do you use the data you have, the insights, but also how do you make people more efficient and more effective? I mean, that's, AI agents and taking off kind of non-value add tasks and making sure you're connecting. I think there's a lot of opportunity there. Again, technology for technology's sake isn't the purpose, but rather how does it benefit the end customer and the agents and the folks to make it more connected, more human? And I think that's going to be a key theme going forward, is how do you become more human, more connected to really kind of solve some of these big problems around understanding, education, and more effective kind of communications. People will understand things better. And again, it's complex, it's complicated. People want to feel like they understand it. So I think the technology, that's going to be a next kind of key battleground for all the companies.
Okay, thanks, Craig. We appreciate your insights. So we'll certainly look forward to 2026 on some of those comments. Over to Steve Crewdson. Steve, same question for you. Kind of pull out the crystal ball, for your particular touch points, particularly auto insurance and other areas. What do you see as far as the look ahead or the outlook for 2026?
Yeah, the auto insurance line of business has been through a really rough 4 or 5 years, and I don't think 26 is yet going to look like the calm at the end of the storm. I think, as we talked about in our auto insurance study presentations to our clients this year, there's about 15% of their customers that are their most valuable customers to the auto insurer. And those customers have increasingly been fed up with rate taking, with other experiences that don't meet their expectations. And I think 26 is going to be a year where the leaders in the auto insurance space are going to be focused on retaining those great customers that they have, the 15% that are the most valuable customers, and really working hard to retain that business because their competition is already looking to steal that business away. When Tony talked about shopping trends, we know that insurers are looking to steal away other insurers' best customers when people are out shopping, and they're putting added effort into that. So I think 26 is going to look like a lot of focus on retaining the best, but also we're starting to see some slippage in the underwriting strictness and criteria and some of the pricing discipline. For instance, one large insurer has already filed for rate decreases in states where their rate indications are for increases. So that clearly points to an appetite for growth, an appetite for being hyper competitive on price. So will other insurers follow through and start to file for rate decreases? And do consumers finally see a lower premium, not just better than what they had before, but their insurer come to them next year and say, well, we're actually lowering your premium from 6 months ago? That could have a chilling effect on shopping. So there's some unanswered questions about what the market's going to do. But I think a lot of the focus is going to be on two things. One, retaining the best customers that we have or winning away somebody else's best customers, and then getting the pricing right to achieve growth.
Okay, with that, we're going to go ahead and wrap up the December podcast. I want to thank all my colleagues for their insights and participation today. We'll certainly look forward to what 2026 brings us. And we certainly thank all of our podcast listeners this year. We'll look forward to seeing you all next year, and happy holidays to everyone. And we'll see you all soon.